that sounds like a really fascinating tool, and it would really help clients. And I should mention this for anyone who's listening from a tax point of view. Even though you got scammed and you're ashamed that it happened, or I'm not talking about the divorce situation right now, but just in a scam scenario, you're even robbed. You don't know. There's a lot of emotions come to bear. There actually are tax resolutions that you can bring to bear. In fact, typically the amount that you've lost in what you've invested can be written off as a deduction, itemized deduction on your tax return. To do that, a couple of things are going to happen. First of all, you got to really have you got to report it to the FBI on their IC3 website, and having the documentation that your Pathfinder would generate is proof that you actually experienced the loss, that you weren't, fraudulently making it up. Those would be very good things to have in case the IRS checks this. And they actually do check these. We've seen this happen. Secondly, all you can recover is the amount that you invested. So if you invested 50,000 and the asset allegedly grew to say 200,000, and then you realize it was a scam, you can't recover the 200,000. That was fictional. But the 50,000 that you generally put in, less anything you might have gotten back, is the amount that you can deduct off your taxes. So that's really good. I mean, you think about, when you consider state and local taxes together, that's like you're getting about a third of that money back as a tax savings, which is nice. It's not something you want to ignore, and it's worth going and contacting, Coinstructive and using their Pathfinder tool to lock in that savings. So mention
That
that
was interesting.
little
I didn't
tax
know
fact
that.
there. You didn't
I
know
didn't know
that.
that. I didn't know about the investment portion, so this is good.
Well, we can do this. It's a lot of people were confused in 2017. Congress passed a law where you could no longer claim a tax write-off if you had a personal loss. However, in Section 165, paragraph 2 of the paragraph C of the tax law, it defines three types of losses. There's personal, and then there's business, and then there's investment loss. And investment loss is any transaction that you've entered into for the sake of profit. So a personal loss would be, if somebody stole your Amazon package off your doorstep. That's a personal loss. But an investment loss, which is everything involving crypto, would be, you can write that off as a itemized deduction. Now you have standard deduction, okay, that we all have, which changes every year. I think it's about 14,000 per person. So 14,000, 28,000 if you're married. Your loss needs to be greater than the standard deduction so that you can actually get that extra loss. But a lot of people have, charitable contributions, property tax, interest on your mortgage, and you get pretty close to that number. And you throw that $50,000 loss on top of it. I've actually seen people slam their income all the way down to zero taxable income, which is kind of,
Yeah.
it's a nice gift given that you've experienced this loss. So that's nice. So yeah, and everybody should do that. I mean, it's worth it investing in if you can make a difference in your taxes.